We have question number 3 from the exam paper. We got special trim lawn mowing gardening services, offers gardening services. The business is owned and managed by Gary Lawnseed. Gary has provided the following account information for the year ended 30th of June 2013. And this is my account information. We've got some additional information down here which says depreciation on motor vehicles and mowing equipment has not been recorded for the year. The motor vehicles are depreciated using the straight line basis. They have a scrap value of $6,000 and an expected useful life of 7 years. The mowing equipment is depreciated using the reducing balance method at a rate of 15%. And it tells me to round to the nearest dollar down here. Question A is prepare an income statement for special trim lawn mowing services. Question B is prepare a classified balance sheet. So we've got a little bit of information here. And what's the first thing we need to do whenever we're doing a income statement balance sheet question?
The title and the year ended.
No, before that, before the title. Classify. So we need to classify, and what do we classify into? Current asset, current liability. Non-current asset, non-current liability. Income. Expenses, and one more, equity. Alright, so we should be able to classify all these items into one of these 7 categories. Alright, let's do that. Accounts payable. Which one does it fall into? Current liability. Accounts receivable. Current asset. Accrued rent expense. Oh no, accrued rent. Current liability, yes, accrued rent means we owe. Accrued revenue. Current asset, yeah. Accumulated depreciation for motor vehicles. No, it's actually a negative non-current asset. So I put a little minus here, it's a negative non-current asset. So those both will be negative non-current assets. Capital for Gary Lawnseed? Equity. Yeah, equity. Cash at bank? Current asset. Drawings? Minus equity. Yeah, so it's a negative equity. Gardening supplies? Current asset. Gardening supplies expense, well that's a little bit easy. Expense. Goodwill? Well, it's a non-current asset actually. Goodwill is the when we buy another business, it's the premium we pay. Interest expense? Expense. Loan from University Bank which is repayable in full in 2015. Non-current liability, I agree. And then we've got another loan repayable in full in January 2013. Current liability, that should have actually read 2014. Motor vehicles, non-current asset. Motor vehicle expense, too easy. Mowing equipment, non-current asset. Mowing equipment expense, Rent expense, too easy. Fees revenue, income, yep. Staff wages, expense. And staff wages payable. No, current liability, yep. So we've got all those. So that's the hard bit. Once you get that bit done, the rest of this is pretty easy. Now, let's do some calculations of a depreciation because it has not been recorded. So let's make sure we know how much depreciation we're going to have. And, okay, I'm just working out something. So depreciation, now it says my depreciation of motor vehicle, so let's just do motor vehicle. So my motor vehicle depreciation is straight line. Now my straight line calculation is cost minus scrap divided by useful life. So let's see if we can work out what the cost is. My cost of my motor vehicles is up here, it's 55,000. So I've got 55,000 minus my scrap value, and my scrap value is down here in the question, it says 6,000. So minus my 6,000, all divided by my useful life, and my useful life was, or expected life, was 7 years. So divided by 7, that equals 7,000. So I'm just going to put a little note here, depreciation, motor vehicle, 7,000. Because I need to include that in my accounts. I'll slide that a fraction, there you go. Now for my mowing equipment, what's my depreciation? It says the mowing equipment is depreciated using reducing balance at a rate of 15%. So now my reducing balance method is my cost minus my accumulated depreciation times my rate. So my cost in this instance is, where's my mowing equipment here, is 25,000. So I've got 25,000 minus my accumulated depreciation, and we've got my mowing equipment depreciation here of 9,647. So 9,647 times my rate, which was 15% from down here. Equals, who's fast on the calculator for me today?
2,203.
So equals 2,303. Okay. Now, I'm going to put another note here, depreciation mower, 2303. So now I know I've got to include those two in my income statement. But what I'm also going to do is I'm going to adjust my accumulated depreciations to reflect the two calculations we've already made. So my first one is 7,000 plus my 14,000 makes 21,000. And then 9,647 plus my 2,303 makes 11,950. So I made those adjustments in my question sheet so that I don't forget it when I go to put my income statement together or balance sheet together. Alright, so now we've done all the workings, so we can start looking at preparing an income statement.